Welcome to Momentum Monday. Today's October 24th, 2021. Howard, so do you think specs are back after what we saw last week?
Well, I mean, yeah, they never went away. They were in a bear market because there was a lot of supply and non-interesting growth stories. And then you have Web 3.0, which and crypto, which is getting all the hot money. But you can see that I was talking about it on Josh Brown's podcast, who Josh was, saying that there's the speculation is going to end, and I'm like, no, there's always something. And I think the Trump SPAC, we'll look at WeWork after. The Trump SPAC is kind of just an unintended consequence of kicking him off, social media. Now he's going to do his thing, and now he's got a ton of money. Listen, I mean, I'm not a believer that he can execute on anything, but you can go buy $5 billion worth of things now when I don't know what the valuation is, 15, 20 billion, once it's all said and done. So who knows? I mean, it's interesting. The most interesting to me is that the SEC has been so focused on talking down crypto, Gary Gensler, and meanwhile, the SPAC that has nothing and involves, that the people involved are a little bit shady.
I mean, WeWork. Okay.
Yeah, I mean, but WeWork's a business. We can argue about the founders of it, but you walk down the street, you see, WeWork's in New York. You walk down the street, you see WeWork offices full. So I think that the Trump thing's interesting just because of the unintended consequence of kicking them off the social networks, and SPACs are a great feature for things like this. The speculation is alive and well. The other thing we can see is, in the S&P is it has 500 plus, almost over $500 billion of liquidity through acquisitions and IPOs this year. So there is just so much money sloshing around. I think for 8-10 years it was 50 to $100 billion in IPOs and acquisitions, and this year you got close. We're not even done on the year, and you're at 550 billion. So that's new money that'll get put to work. People feeling wealthy, and then you have Web 3.0, which is kind of a new frontier. So tell people what you see. Tell people what you're seeing.
There's so much money in the system that PayPal is trying to buy Pinterest. That's what's going on.
Well, I mean, listen, if they don't do it, maybe Square does it, right? They're battling, these guys don't control the rails. They live on top of the rails. PayPal sold off on it. But again, like Corp Dev, when stocks are doing well, Corp Dev wakes up. When stocks are doing shitty, no one wants to do a deal. Pinterest is an e-commerce site. PayPal bought Honey. Pinterest is theoretically a shopping site. And if PayPal could control the rails of it, it just reminds me of Visa and MasterCard, which report this week. They really are the rails, right? All these companies say they can disrupt. If they really were disrupted to Visa and PayPal, to Visa and MasterCard, they wouldn't have to make these acquisitions. Whereas Visa and MasterCard get paid on every acquisition, whether it's PayPal or Square. So crypto is the most disruptive thing to Visa and MasterCard. And I think that's why Visa and MasterCard are going sideways is, all this economy is happening on Ethereum. It's just a massive new economy that Visa and MasterCard are not seeing a part of yet. We'll see when that money comes back or doesn't come back. It could get worse. But the economy is opening. I'm in New York, and I would say it's 70 to 80%, other than Midtown. I'd say the rest of the city is 70 to 80% back. Walking around the last 7 days. So what are you seeing?
Yeah, so the S&P is back to all-time highs, basically, pretty much. It was a very quick recovery. Every time the S&P drops below its 50-day and people expect, this is it. This is like the big, 10-50% correction. Like the dips are just, 4 or 5%. The recoveries are super quick. And we're kind of seeing the same thing again. Obviously, the new earnings season has just begun, and last week, the news from Snapchat kind of led to a dive in a bunch of tech stocks. But to me, that seems kind of isolated. Obviously, we'll know more this week when all the FANGs and other stocks report. But for the most part, constructive action, and you can even see it in Russell 2000. IWM is the ETF. It's setting up. It's kind of back above its 50-20. It's kind of climbing above its 5-day moving average, making higher lows. It's kind of setting up for a potential breakout. So we'll see if it happens.
Seasonally, we're getting into a good time of the year. We've passed the Black Monday dates. Got through September. Kids back in school. I'm not following COVID that closely. It's just New York's careful, but streets are mask free.
I mean, there is some talk about Delta Plus emerging in Britain and some parts of China. So we might see some of the vaccine stocks perk up again. But for the most part, what I'm seeing is that both inflationary plays like financials and oil and metals continue to lead. Like XOF, it's a multi-year highs, continue to make new highs. Gold and silver are starting to wake up. Also steel and copper are strong. Oil, obviously, very resilient, continues to make new highs. So the inflation plays are strong, but at the same time, also the deflation plays, which is basically software, they're also looking decent, holding well so far. We'll see how they survive this earnings season, but for the most part, many of them are holding incredibly well, considering that supposedly inflation expectations are rising, and they are rising.
Yeah, but this remains a perfect storm for crypto, right? It's both inflationary and deflationary.
Yes.
If you want to play speculation and inflation, you can play the tokens. If you want to play the inflation, you own Bitcoin and Ethereum. So, it's a whole new market. You want to play inflation in the regular world, you can try gold and you can try copper. But if you want to play it in the digital world, you play with Bitcoin and Ethereum. And if you want to speculate on inflation, you play the speculative tokens. So the young people have moved over. It's still a tiny market. But man, I mean, every day I spend more time learning about Web 3.0 because you have a whole other world that kind of, and you don't have the Goldman Sachses of the world, and you don't have the JP Morgans, and you have shenanigans for sure, but you have a much smaller universe to learn, and you can play as if it's a real economy because you have deflationary type or inflationary type of assets you can own in Bitcoin and Ethereum, and inflationary type speculative plays that you can own in hundreds of tokens. And it's kind of fun. And a lot of this stuff is, just growing super fast, and it's not institutionally covered. So a lot of smart people in my network are spending, closer to 100% of their time on Web3. That helps Google. The internet gets bigger. That's one of the, I don't think it helped that Snapchat missed their numbers and Apple kind of put a damper on ads through iOS 14. The Snap was the biggest, the numbers were really good on Snap, but you can see Web 2.0 stocks are topping. Those are gap downs after a long basis. So it's not going to be a quick recovery anymore on some of these. They just can't make any headway. And it seems like of all the simple calls, it seems like Web 2.0 is really in trouble.
Maybe. I'm not so sure about it.
No, they're in a growth trouble. The combination of Apple squeezing them on ads and the combination of the unintended consequences of really terrible free speech type rules that like change on a whim. And the fact that the government's leaning in, these companies are not in trouble financially, they're just in trouble from a growth perspective. And then you take all the hot money and you move it over to Web 3.0 and commodities, financials. These things could go under massive distribution. I'm talking about Facebook, Apple, Twitter, and companies that are relying on ads, not the e-commerce companies. You look at eBay and in the collectible space, eBay's become a renewed, that's where people hang out to see kind of trends, and that's breaking out. So it's not every, and that's a Web 1.0 company. So it's really a stock picker's market, and there's really a lot of common sense on how the money's moving around. But overall, there's just, like we said earlier, 500 billion coming into the market and new money for venture capitalists to redeploy. They're not going to go out and buy things. They're buying weird things in the digital world, and they're buying homes, but they're not buying toys. They don't need toys because you have Uber, and they're buying jets, but they're not buying, the regular toys. There's not a lot of companies that you can buy in that space. So I don't know. It's really, and it's one of the most interesting markets I've seen. It's going to be a really fun fourth quarter for traders.
I mean, it's always fun. What I think is that companies like Snapchat and Facebook, they're probably going to go through a few quarters of pain, but at the same time, they're also going to try to pivot into AR and VR, and maybe they'll just come back stronger. We'll see.
Well, they're not in trouble. I'm just saying stock market wise, you've got distribution.
Perception wise, yes. Sentiment wise, yes, they are in trouble, obviously, if their stock is dropping. But back to your point on Web 3.0, I'm kind of noticing the same things like earlier in the week when, like Monday, Tuesday, there was basically nothing moving in the actual stock market, and then all the action was in crypto, obviously because of that, Wednesday especially, because of that new futures Bitcoin ETF that was finally launched.
Yeah. So well, there's a lot of leverage in the system. Again, I'm not an expert in this space. Like I said, when you're talking about speculation, there's hot money out there that's shown in the Trump. They didn't even try and put financials up. There's no product. It's all stolen open source code. Well, not stolen, it's open source code, but they didn't even change any of the code. Like the hackers are all in there and stealing Trump's name already. It's a clown car, as always. There's no plan. It's a financial maneuver. And but it's not going away, and Tesla. So I'd say, like, look at the strength. You got Tesla,
new all-time highs, yes.
eBay, you have, like I said, in the corporate world, Apple's winning. That JAMF is like I mentioned yesterday, JAMF is a proxy on Apple in the enterprise, and you can see what's going on there. So this next wave of enterprise, this next wave of enterprise is all Apple, and Netflix breaking out, with massive games. You've got Curb Your Enthusiasm starting tonight, Succession. So there's just great content. So as we go into Web 3.0, I think the FANG stocks that win are Netflix and Google. I think Shopify becomes part of the FANG Amazon thing, and people are going to get bored with Twitter and Facebook. They don't have this. They don't have the time. And all the Web 3.0 chatter happens on StockTwits, some of it on Twitter with Bitcoin, but more in Discord, which isn't even a public company, and Telegram and Signal. So again, this stuff, you've got to follow the, there's a lot of underlying currents happening right now, big shifts in money. And it's an exciting time. I'm tired.
All right. Let's wrap it up then.
Have a great week, everybody. Ivan, thanks, buddy.
All right. Thanks, Howard.